Many people are right about the direction a lot of the time, but it doesn't mean they're profitable, right? It's not hard to be right about direction. Of course, we do it a lot and we're very precise, but this is what it really means to be profitable. Hey, how's it going, guys? Welcome back to mentfx, and in this video, we actually just got done with our private webinar that we have every single Sunday in the private mentorship with all the outlooks on all the pairs that we're looking at on cryptos, indices, commodities, and currencies. As you know, we mostly focus on currencies here, and we had an interesting talk as we broke down all the trades that we had from last week and what we actually did in terms of those trades, the importance of management and the importance of getting in and how we get out, the importance of looking at the market the way we do, and multi-timeframe approach. And what I wanted to do today with you is actually break down some of those things for you and get you thinking in a way that maybe you haven't been forced to think before, or haven't really experienced yet, because you might be looking at some subpar education or not learning from a good place. So we're just going to jump right into it. Now, the main thing that I spoke about with my students and what I wanted to get across today was to teach you the idea of multi-timeframe fractals and understanding that really you don't have to be right about any large move to be right big time and make a shit ton of money in this market. What do I mean by that? Just looking at my screen here, when you look at this, it actually looks like a really good trade. You look at this, maybe you think I'm a scammer. I don't really care. You look at this, this is a good looking trade with a lot of movement, with a lot of profitability, right? That could have been had, as you all know, especially with the way RR works and the way we think about trading in a form of RR. Now, what's interesting is, we had a few more of those trades, and there were losses in here too. I don't have all the losses on here. These were just the main highlights of my week, some of which, ran a good amount of RR before coming back to break even, some of which ran a decent amount of RR before coming back to break even, and some that ran a decent amount of RR that were closed before spread hours, right? We spoke about all this in the mentorship, of course, if you were there. But what people don't recognize is, although all these trades might look really good, the second we step up to a little bit of a higher time frame, right? Like even a 1 hour, and you look at these, recognize where these moves are happening, right? So this is something that's really important, because what happens to a lot of people, whether they trade the retail way or even a smart money way, is they get caught up in thinking that as they're trading, they need to be finding moves and capitalizing on moves and only getting involved in moves that look like this, that look like this, right? That look like this. For them, it's basically this idea, or the way they think is, unless I'm in this actual huge move, I'm not making money, right? You go to even a higher time frame, same thing. Unless I'm in this move right here, I'm not making money, right? And what they'll do is they'll go inside of here, maybe on a 1 hour or something, and they'll look at it and they'll say, yep, I had this structure shift, maybe an entry here. Actually, this was a really good entry. I think we took this in the mentorship a while back. Right? So they look at this and they say, okay, I had a good entry there, but, if I didn't get in there, I miss all of this move, right? And they're always just focused. Their eyes always go to the main large move, and all they're thinking is, how do I get that main large move and get in? And a lot of the time when they go in to look at that move and find out a way to get in, what they might see is a lack of ability to enter, right? It might go to something like this and just break up like that. And they'll be looking at this move, right? Trying to find a way they could have gotten involved in it, or looking at prior moves like that, like these huge swings, huge swings, huge swings, huge swings, wondering how they could have done it or why they couldn't have done it. And what they forget to recognize is that RR and money and profitability can be found in the tiniest moves that you can imagine, right? These tiny little candles right here on these time frames are enough to feed yourself, your family, and anyone else you have in your life, and live a very good life if you understand what you're doing, right? What you need to recognize, though, is it's not about catching these huge down moves or these huge down moves. It's about taking out the proportion using your risk style or your risk management, right? You're not looking to catch this whole thing. You're not looking to catch this entire move, right? What people don't recognize is I, as mentfx, the special mentfx, can catch a move from this black candle to this black candle right here, those two black candles, right? Let's just zoom in on that. Let's just explain this. I could catch a move from here to here on a lower time frame that could create more profitability than someone that's maybe in the retail sphere that caught a buy from this exact low to this exact high on this entire move, right? Because as you learn to view the market from the standpoint of smart money and start to view it from the standpoint of structural ranges in accordance to specific POIs that you want to trade, and then the confirmation of those POIs under Wyckoff or double MB, a mentorship concept, and then have your tight stop losses or your stop loss in reference to that, and then have the management on top of that, you can actually create some insane movements for yourself where even a small move like this, right, from this high to this low, will capitalize and create more profitability to you than catching the entire buy from here to here. Now, how's that possible? Why is that possible? You know, how am I saying this? If you're new, it might be a little crazy of a concept to think about, but let me break down a reason as to why this is, right? So let's imagine you are actually like a retail trader or even a dumb smart money trader that's looking at this, maybe this supply zone up here, right, as part of this daily impulse right here, right? So here's a daily impulse, right? And let's say you're even retail, right? So let's say you have a zone here, right, with your support resistance. Maybe you have a zone here as your resistance, right? Whatever it is, price comes up here and begins to trade down. What you're doing already, right? Maybe you see this confirmation, right? This doji, right? Another doji. You're looking to take that sell, protect, you know, with a good amount of protection, right? Because you know the next support resistance is here or the next supply zone is here. So you're protecting yourself there and looking to target the next low, right? So what's happening is even if on a lower time frame, right, this begins to break down hugely, right? Imagine this move right here on the right here. If it did that, you're thinking you caught some insane large fall off, some insane trend, right? But in reality, that trend that you just got into that did all that is a 1 to 1.42 RR, right? Similarly, if you take it from the standpoint of what we do at a smart money level, whereas you're looking at that 3-box strategy as your higher time frame, you're jumping into those lower time frames, following them as you go with all the ranges that exist within, looking to position yourself in those ranges as they occur, right? Positioning yourself in a given range, because remember, and I'll break this down for you guys right now, actually. Again, 3-box strategy, very basic stuff that I teach on this channel. Check it out in the other free YouTube videos, right? Breaks down the structure from this high to this low. That's your protected high. Price comes up into the unmitigated imbalance area right here, coming into that supply zone, comes into it. We reconfirm that supply zone. The next target is this low as per the 3-box strategy, right? 1, 2, 3, look to target the lows, right? And all of that is part of that higher time frame defined bias, which is defined by this impulse, looking to continue lower, and that all of that is now defined by, you know, we can go left here as per the golden goose strategy, as I like to teach it, as part of this entire bias right here, right? And we know we're looking to continue that into the lows. So there's clearly a short bias set in there. And what we do is we take those ranges, and based on your confirmation and based on your levels and based on the timeframes you want to trade, because as you know in the mentorship, we did this on the 1 hour, the 4 hour, the 8 hour. We do this across the board. And I teach this on my free YouTube channel as well. What happens is when we look to reconfirm certain areas, like that 5-minute break, look for that confirm of the 5-minute. Confirm the 5-minute with new 1-minute ranges. As you can see, we have the 1-minute ranges created. 1-minute supply zone. Price comes in to absorb it, and we look to enter off of those 5-second plays, just like I teach you guys to do. Like, I mean, I trade the lower time frames, which is how I do it, and we enter off those, right? What we do is we create an opportunity for us to make a shit ton of money, even if the move is tiny and it's minuscule, right? That is why, if I go to the daily right now, you can't even see my entries on here. I go to a 4 hour, notice my entire entry that run, like, I think it ran over 1 to 80, and then I closed back at 1 to 46 with partials along the way, of course. And we can take a look at this right here. So I'll jump down to a lower time frame. So this original trade was actually first taken profit at that low right there at 0.5%. Took another profit just under here around 1 to 25 under that low right there, and then had the rest closed at the structural shift in the opposite direction, which was found right here. So after I saw a lower time frame shift of structure, and then I saw that shift twice, thereby putting in a new higher high, higher low, higher high, higher low, and in this case putting in lower low, lower high, lower low, lower high, right? I sometimes manage my positions, especially if it's a Friday and I'm trying to close, at these breaks down. Because as we know, when a structural narrative shifts, it's more likely to stay shifted for a given amount of time before it, you know, reshifts again. So that's where the close was. But notice how that trade right there has basically made 43 times more if you held the whole thing, which I didn't. So let's just like even half that. Let's say 20 RR. That trade here, right, from that one range right here within this bigger range, that literally on a higher time frame looks like what? One black candle. That created more RR for you. In actuality, with a conservative approach, 20 times more RR for you than you would have made if you caught the very, very high of this price and it keeps going short. Or if you caught the very, very low here to go long. Because what happens is the people that are looking to buy of this nature, right, or used to thinking this way, is unless they get a move that is large like this, there is no money to be made. And they don't realize that within just even this consolidation or this price action right here with these up candles and down candles, there is insane and absurd RR numbers that you can hit based on these range-based definitions of how you're trading, right? So something that I wanted you guys to take out of this video as you watch it is just to recognize that trading isn't about finding the way to get into these huge moves. Trading is about following a specific set of rules to get in with your confirmations and then to allow those to deliver if they need to, but also recognizing that high RR, right, doesn't come from these huge moves, right? Similarly, on a 1 hour chart, you have to realize that you can make more money off of this move up right here from this low to that high with a lower time frame confirmation than you could on a higher time frame entry anywhere here and targeting all these lows here. Right? Because once again, you need to think about it from a standpoint of what's your entry criteria and how are you managing? Is your entry here with a sell, protect above whatever you're looking at, right? If you're a retail trader, maybe like support resistance here, protect above there because you know that would be bullish, and then target this, right? Great trade, right? You got that huge fall off, you got your 1 to 2, that's great. But similarly, if you're also utilizing what we teach here, right, there's a good chance that on some time frame, so we can go around and play with that. I'm not going to break it down immensely, but once again, just in here, right? Sorry, got something stuck in my teeth, right? Just looking at this really quickly, I see a really nice entry here, right? We have a break of structure to the top side, right? Structure's bearish, breaks to the top side. There's a nice supply and demand zone here, so this is a demand zone right here. Price comes in, gives you your Wyckoff confirmation on a lower time frame, which we can go and find. Again, this is just the basic free knowledge that I share on this YouTube channel day after day after day. Okay, I can't go to the lower time frame, but we'll go to the left here. Find out where we were really quickly. Where were we? We were way more on the left here, weren't we? Oh no, I lost it. That's unfortunate. Isn't that? Oh, here we are. Okay, right. So we're looking at this area right here. Maybe we can look at it on a 30-second. Will it let me do that? Nope. Sadly, I can't get that low. So we'll have to stick to the 1 minute. So we'll go back to wherever that was. I think that was back here somewhere, right? Where were we? Well, I'm lost again. Let's just go find that really quick. 5 minute, there we go, right? So that's your huge move that you might see on that higher time frame with that huge move, and you're like, yeah, I made the most money because I've got the correct direction, right? This is this idea of a lot of people think that being correct about the direction and having it move in your direction impulsively is a really big thing. It's not, right? I've made more RR in tiny moves like that than people have made in these entire swings, right? So something that's really important is to disassociate yourself from the fact that you need to find that move that starts this entire huge move, right? The reality is you don't. There's a lot more because of the way that you can risk and the way that you can leverage within price, right? So even if we look here, and we'll have to stick to the 1 minute here because we can't go lower, as you know. But if we go here, go to that 1 minute, right? And we find that area right there. Under this approach, right, let's just find the most clean Wyckoff scenario we can find here. So just looking at this, and we can consider the lower time frame, right? You have some kind of selling climaxes, ARs, and STs in here. The liquidations of those, the last liquidation in terms of a spring, probably a shift above structure in here. There's probably already an entry on this wick, but let's assume there was a shift above the AR, and this was made here. So this is your SOS, right? The sign of strength in the price, right? And then you look to enter off of the last, let's say, last unmitigated candle, just like that, 50% of it. Protect yourself across the low of the overall move, right? Look to target significantly higher as such, right? Maybe you target this as your first partial, and this is your second partial, right? So 1, 2. So this is going to be a very basic breakdown of this 3-box strategy and understanding that it's not about finding a move that sponsors like some insane move on a higher time frame. It's more so about understanding the fact that one candle on a higher time frame can basically make you more money than people make in years living, right? And the reality of that is once that click occurs, you're done looking for these huge moves or only studying those moves. Because what I've seen a lot of people do is they'll go and find this huge move and say, okay, how could I be in this big move? Oh, there was a supply and demand zone here, but it never made it. I can't trade that. What's going on? Instead of considering the fact that if they followed this entire move, there was a trade in this supply and demand zone after it came and absorbed, and then they could have taken that long to these highs, and of course held if they had to hold. But similarly, as they continue going through this, they might miss the fact that inside of this move alone, right here, last down move before the up move. So that's going to be probably a last down move before an up move on maybe like a 2 hour, right? We can play around with this. There you go. That's that idea of volume in candles, right? Switch between timeframes and you can see everything within a candle, right? The candlesticks show you everything. You never need to have a DOM or a volume or anything like that. I've never believed in that. I've never used it. It's useless, right? If that software becomes unusable, I can still trade because I understand this candle-based approach, and you can too. So that's your last down candle right there, right? And what people don't get, and what a lot of people mistake, is that because they missed this, they've missed the big move on the market. But the reality is just this move that comes to clear that high right there. That move from that low with a proper confirmation of your 2 hour zone to the run of that liquidity just above here can make you more money than you could have gotten if you found an entry at this very low right here of the resistance or the support and held it up. Why? Well, because what's going to happen is, once again, you might be thinking in this format, right? Maybe on the confirmation. So as it breaks maybe that high, look to protect about the low, right? You caught that whole move, that huge, insane move, right? You can go and show off to your mentorship or your friends or whatever. Huge move caught right there. But the reality of it is, we can jump down within this one range that we have created for ourselves, that 2 hour range with the 3-box system, right? Where's that 3-box system? Impulse, SND, confirm in there. Is there a confirm in there? I don't know. We can go check. There's probably going to be one, right? So we'll jump down to that 1 minute once again. Go to the left here. Here we go. Found our area right there, right? Price taps in. What do we start to see? Lower time frame, clearly a nice entry, but we can follow this, right? Lows getting manipulated. So lower time frame, probably selling climax, AR, ST, STB, spring, breaks above, makes an SOS on some kind of lower time frame, right? So, or you could call this normal break of structure on a lower time frame. I'm not going to jump down lower because we can see this. So once again, you can take your zone, your last unmitigated zone, take the 50% or the open, right? Whatever it is you want, take that as the buy, right? Maybe you have it right at that low and you take a loss on this, right? Or you have it protected a little bit and you take it up. Otherwise, right, let's assume you didn't take that and we can keep following this. In what sense? Well, you have selling climax, AR, ST, right? Lows, becoming lows, taken out, going to the strong hands, lower time frame shifts in their structure, right? Because remember, on a lower time frame, what does all this look like? What is this wick shift above that wick? Well, on a lower time frame, this whole thing right here, juxtaposed, is going to look like this. Low comes up to make that high right there, comes down to make these lows, all these lows. Look at all those lows right there. Liquidates those lows, makes this wick, comes up, liquidates that low with this down candle, which might stop you out of this trade, right? Then what does it do? Trades up above the high of that candle, which is this one right here with that wick. So that's that wick right there. Boom, traded above. And what do we expect? Well, if we know this is Wyckoff, right? Selling climax, AR, ST, 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 making the lows. Weak to strong hands, weak to strong hands, and the shift above. And there's once again your SOS right there. Then we interpret that and basically guess that price is probably going to reach back into this supply or demand zone, in this case a demand zone, to go long from. You can go long from the open, from the open or the 50%, and then target accordingly. So once again, we shift above with that high. We look to take the buy off of the open or the 50% of that candle, right? However it is you want to do it. Sorry, here's the buy. So let's say this buy got stopped out. There's your -1, right? Let's go with the low. Let's say you had it perfectly at the low. It actually looks like it held it. You can see that. So if you factored for 100% mitigation, you actually, no, actually maybe it took it out. Okay, either way, whether it took it out or not, you have the next setup that occurs here. Take your first -1, all good. Look to enter off of the refined supply and demand zone, which is that one right there. Take it off of there. Again, stop loss protect. Oh my God, I keep doing that. Stop loss protected just under the low, right? Price taps back in. So this is what we're looking at. Remember, we understand price from a fractal perspective. We can see the Wyckoff schematic here with the inner structural shifts, right? We know that this juxtaposed to a lower time frame will look like that, right? Do we want to prove it? I mean, hopefully it lets me go on a lower time frame. I hope this works. Please. Can't get a 5-second. That sucks. That's so bad. Okay, so we're going to try this again one more time. Let's go to the 2 hour. Where were we? Oh, we were really far back. There's no chance we get a lower time frame here, but that's okay, right? So let's go back to the 1 minute here. Right, there we go. But either way, as you understand, here's that trade. Does it even come back to break even ever? Nope. And your overall target is where? That next 2 hour high as part of that range. Now, what's important about that? So again, just recognize that on a lower time frame, and you can go and test this yourself. This weak to strong hand transfer inside of our higher time frame 2 hour range, remember, which is from this low to that high, is now being met with a confirmation, and we are now taking it long as I've taught you to do on this channel, right? And we're doing it from the supply and demand zones as I've always taught you to find in terms of lack of mitigation. And how does that exist? Remember, without this candle, what do you have here? You have a demand zone created, and right now this high to this low is its own inefficiency. So we look to trade off of that. And on a lower time frame, this exact thing is representative of this right here. And these entries right here is this entry right here. You can have another entry here if you wanted to at 50%, right? You could take that 50% as you wish, just like that. Just like that. I don't know if that hits. We can just take a quick look. I think it misses it. Yeah, it misses it. So the 50% would have not given you a trade. But once again, notice how we follow that price, and we can see it fractal across all time frames. This is why this idea of time frames has always been so weird. People have always asked me, like, what time frame do you use? Well, it's all time frames, and this is a good explanation and view of that. But notice that now this trade, so now we can play this out a little bit on this 2 hour, right? Where are we? There we are. So we're in that trade, right? Price never comes back to break even, and there's that run, right? We look at that on a lower time frame. Here's that run for you. There's never any break even on this, right? As in price never returns to the break even once you manage this accordingly, right? Let's move that over to the right. And all of this is profit. And notice what's interesting about this. If we go to that higher time frame, what do you see? A lot of people, when they go to this higher time frame, just see this little bundle of price action. They think of it as potential just like consolidation, right? And they think that there's nothing to be done here because of the way price looks. Instead, once again, they're focused on the wrong things. They're focusing on these huge moves, and they're asking themselves, how can they be part of them? Now, you can be part of them, and it's going to happen, and you're going to be part of them sometimes because that's how trading works, and sometimes you'll get in, and this will just fly. And if it does fly and redoes this right here, that's when your account will grow exponentially very quickly. You're going to grow your account, you know, anywhere from 10 to 30% very quickly. A lot of things are possible in this market, but notice very quickly that this same jumbled bit of price action, under the way I've taught you to think here in terms of looking for that weak to strong hand, in terms of the 3-box strategy, in terms of your targets, in terms of how you manage your risk, all of which is on my channel, which you can find for free. Do not join my mentorship. Do not. It's all here for free. If you want to take it to the next level, the link's below. You can check it out, but you don't need it. Please just test this. It's all I ask. But notice how this tiny move from that demand zone to the next liquidity high, like I teach you to look at here, gives you a 1 to, what is this, 11 RR. That's 11% just at your first next partial, right? At that first level. And then you can continue. If it reruns like this, you make a lot more. But this exact same thing where you actually caught these huge moves in price. Look at these huge moves. Beautiful. These huge moves in price you might have been looking to catch are worth what? 1 to 2? Right? So the point I'm trying to get you to witness and to see as you're learning from this is to recognize that it's not about catching the biggest impulse you can find. Right? It's cool when that happens, and you will catch big impulses. But stop looking to catch the huge impulse, because the huge impulse isn't where the money is made. The money is made in following your risk management every step of the way so that you can make this 4-hour, one black candle like this, even if you're wrong about the overall trend and the next liquidation. Because right now I'm bearish on the EU. I have been forever. Ever since we got here, I've been bearish on this, looking bearish. We even spoke about the buys from here to continue bearish right here, and now we're continuing. So I suppose this is going to continue short, and my overall targets are still at this low, which is just part of that daily 3-box, right? So it's right here. Here's that daily low. So let's delete all this nonsense retail shit. Ugh, beautiful. Right? And instead, let's go back to what we were looking at. Here's that absorption happening, and we're looking for that to continue short, just like we did last week. And last week we were able to secure a lot of great positions off that. You can see I had some trades in here. And notice once again, even on a 1 hour, these might all look like insane, like just small losses or even tiny gains that you can't even trade, right? There's no big moves here. But all of those ran at least 5 RR for me for my first partial, and then got hit break even. And this one ran, I think, over 80 RR. I didn't take off at every point. I took off most of it at the 10, the like 20s to 30s, and then the rest was closed at 1 to 40 because I was closing for Friday. Market's open now. What am I going to do? Continue searching for those shorts as we continue, right? Again, not financial advice, of course, but recognize that it's this 4-hour candle, one little candle like this, could make you much more than the entire, basically, the entire range from this low to this high being caught as a buy, because of the way that we basically look for our footprints and then confirm those footprints to get involved. So just from this video, walk away with the idea that, one, never FOMO into large moves. As large moves happen, recognize that even the small move in a correction of a big move, the small move into the correction of a different move, right? A bearish market, this correction here could make you more RR okay, and more money and more profitable than any trade you might have caught from the very top here with your, SL based on an actual, stop loss, like maybe something like that, right? To the very low. That's your potential 1 to 10. You can catch that or much more in those moves inside. And again, this applies to all time frames, right? We can work this in and outwards. We can go across time frames. In the mentorship, as you know, we just spoke about all these entries here that happened. We looked at a 4-hour, 1-hour, 2-hour examples. Like we looked at all of them, right? But recognize that it's not about catching these huge moves or only studying the price action on these huge moves. It's about focusing on each range that is made and then focusing on following your rules within those ranges. And as you do that, you're very going to quickly see how it racks up to real profitability. And you're also going to see how over time, when a range begins to play out and you catch that range with whatever setup you have, with your stop being, with your stop protecting yourself, there we go, with your stop protecting yourself naturally, as you confirm that, right, and look to target at least the next high, you notice that that RR on its own is almost as much as this entire range sell-off, right? And then the continuation of that into your higher time frame zones is outdoing this thing 3 times, triple X, 10X sometimes. And on top of that, if it continues, which again, I don't know where price is always going to go, right? I have my ideas, my bias, and with my bias, I formulate my trading plan and I get involved accordingly. But if this continued to break this higher, this is going to stack up to heights that you might not even be able to comprehend currently, right? Which is why I always tell you guys to go and test it. You don't need to be part of my private mentorship to test it. Of course, if you are, you know how I make you test it. You have access to the journal. You have access to the video that breaks down how you should journal and do that data collection. So refer to that if you are in the private mentorship. Otherwise, if you're not, use this free content and actually visualize it. Recognize that it's not about catching the entire range play. It's about following your rules in the ranges that exist across these time frames, getting involved and managing accordingly. Because even when you're wrong, as I love to say, and as everybody teaches now on YouTube, which I love it. You guys are learning from many places now, so thank God. You can be wrong so many times, but you can be very, very profitable despite being wrong. You could be wrong about the range you're in multiple times and still make money, right? That's kind of the idea you're seeing here. I'm actually right about the direction here, but I can't find a trade that actually runs, right? I was right about this entire direction the entire time, right? It went short. Great. Doesn't make me a good trader. Many people are right about their directions a lot of the time. Don't call me. Thank you very much. Many people are right about the direction a lot of the time, but it doesn't mean they're profitable, right? It's not hard to be right about direction. Of course, we do it a lot and we're very precise, but this is what it really means to be profitable. It's about taking that direction, getting involved, allowing that direction to be wrong multiple times, but still making money doing it because of the way that you manage your trades and because of the understanding you're coming in with. And because we have this understanding of footprint and multi-timeframe confirmation, we're able to make these basically 4-hour candles, right? Or a 1-hour candle make you more RR or get you into moves that you might be wrong or right about, make more money than the entire range capture that you might be able to get into, right? A lot of swing traders might be in this entire sell and they're finally happy they got a really nice move, right? Because ever since this big move here, there's been nothing. And now finally there's this huge move, but how are you getting in this? Are you looking at, the resistances here? Are you looking at your supplies here? Are you looking at the resistances here, right? Whatever, supports here. What are you doing? And are you selling and taking, what are you doing? So let's say it breaks down here. You sell into it, right? Stop above the support resistance line, of course. What's your first target here? Okay, so it took you, what is this? About 77 days, so about a quarter of a year, a little bit more than a quarter of a year to catch the one that's 0.87, right? And at the same time, someone on this 1 minute chart has caught that, 500x over within, even in one of these candles, in this green candle or this up candle, there's someone that caught a sell in that outdid this trade, 6-fold. So stop thinking in terms of needing to catch or capture the biggest range of a move and instead focus on that inner range working and the range works that you're within and look to manage accordingly within those ranges. And that's how you're going to breed and build profitability over time. So thank you guys very much for watching. I appreciate you all. I know my hair is getting a little long. I'm about to get it cut. So next video you see me, I'll probably have a haircut and it'll be looking professional again. But nonetheless, thank you so much for participating. If you watch this, leave a comment, whatever. I didn't mean this to go 30 minutes, but it is what it is. We try to deliver the best education out here, and clearly, with the state of YouTube currently and all the other channels that are following in our footsteps, it's clearly teaching people. Which is a good thing, and I'm happy about that. And I'm passionate about what I do, and I'll continue doing it until the day I die. So thank you guys, and I'll see you in 80 years from now when we are educating more and more. I appreciate you all. Peace.